Hello, everyone. It's Henry Kutarna. How to prepare your best pitch deck. Welcome to this workshop. This is put on by KAST, and I am an EIR at KAST, and I'm really happy to be with you today to work on your pitch deck. Now, a little bit of background. First of all, KAST is putting this on for its clients and its friends. And so I'm happy to be speaking with you this morning about the pitch deck. The pitch deck is one of the most important things you can have as a tool in your business, whether it's a startup, an early stage company, or a company that's poised for growth. The pitch deck is your most important tool to get an introduction to people. So if you want to raise capital, introduce a new product, or talk about some new development in your company, or present to interested audiences such as customers or advisors or banks or finance people, the pitch deck is your most important tool. So that's what we're going to talk about today. First, I'd like to begin with an introduction. So I'm Henry Kutarna. I'm a KAST EIR, and I'm a consultant and an investor. My background is that I have grown up in the real estate investment business with my family. I also run an investment fund for my family that is focused on technology businesses. I have, with my family, personally invested in 22 technology early stage startup deals. And I ran an angel investor group for 12 years. I still run an informal group of angel investors. But when I was running the angel investor group at an organization where I was the vice president of investment and market development, we saw 200 to 300 deals a year. And so we screened 200 to 300 deals a year, and I've done that for probably 15 years now. So I see a lot of technology and early stage startup deals. I have personally learned and paid the price, paid my tuition for the common faults and mistakes of an early stage startup. I've also seen the best and the brightest and the most brilliant startups, and so I have a lot of experience with that. It's a wonderful thing to look at. I also have in my background, I am a general consultant. I work with companies. I am a mentor to CEOs. I also participate in peer groups. I ran 2 peer groups for 8 years of CEOs. I started 2 other ones, and I'm currently starting a 3rd one where I will be assembling a group of like-minded CEOs of companies from non-competing industries that are going to work together to solve their challenges and to accelerate their performance. I'm also an investor in other kinds of companies, such as manufacturing, certainly continuing with the real estate. And I still see 200 to 300 deals a year. So in today's workshop on how to build the best pitch deck, I have personal experience that I want to pass on to you. I'm happy to do that, and I'm looking forward to speaking with you more about that. Let's turn to the course itself. How is this going to work? Today, I'm going to spend 2 hours with you. I'm going to walk you through step by step, point by point, the 12 key questions slide deck. This is a format that we've developed over the years. It is a format that is very practical. It requires quite a bit of preparation, but once you have it prepped and you know how to speak to it, you're going to get, I think, quite a lot of feedback from people that is very positive, and you're going to get some, I think, some very interested parties, particularly investors, to look at your deal. The whole point of a 12 key question slide deck is to get the next meeting. It's not to get a check. It's not to get investment. The whole point is to lay out these 12 key questions that we're going to go over in a few minutes here. And it's to lay them out in a format that follows how the mind of the investor works. Now, I don't claim to be a mind reader, but at the same time, I have seen hundreds and hundreds of deals, probably thousands. I've seen definitely hundreds of investors and how they think and how they ask questions. Combine that with my own experience of how I ask questions about a deal when I see it, when someone approaches me for capital. There is a set of switches, I call it, in the mind of the investor that clicks on and off. And if you can tell me in 12 key questions in 10 minutes, by the way, this is all about doing a 10-minute pitch deck. If you can tell me these 12 things in the sequence that I'm going to talk about today in 10 minutes, I will understand everything I need to know about whether I want to continue discussing and talking with you about your deal. So it doesn't guarantee, no pitch deck guarantees that you're going to raise capital. But with this kind of pitch deck that I'm talking about today, laying out the 12 key questions in this sequence that I will show you today, and completely not ignoring or missing any of the 12 questions, you're going to give the investor everything they need to make the decision as to whether they want to talk to you further. And that's why I say the whole point of a 12 key question slide deck is to get the next meeting, not necessarily to get checks and capital. I have seen deals, I'll mention that to you. I've seen a pitch to about 5 years ago. I saw a very informative pitch where people actually wrote checks while they were sitting in the room and brought that to the investor, to the entrepreneur at the front of the room. Very interesting thing to see. Doesn't usually happen. How long does it take to get capital if you're doing this type of thing? Usually I say that you will get capital in between 1 month and 12 months. If you get capital prior to 1 month and a series of meetings with due diligence and more detailed discussions, you're in a very fortunate position. If you are waiting at 12 months, a year, and you're still talking to people, chances of them making the investment decision are very low. And so I would think that the typical progression is about 3 months. If you start with a good pitch deck and you see investors, whether in a group or in an individual setting, you know, it's going to be about 3 months before you actually raise capital. Most people are not going to raise the capital that they think they will, because the investment climate is very challenging. Yes, there's a lot of capital out there. There are many investors out there, but the problem is that the deals are, there are so many deals as well, but it's just, it's a big challenge. And so I want to tell you, first of all, that I admire the entrepreneurial spirit. Every investor loves it. Most angel investors, and they're called that for a specific reason, as you can imagine, they love the entrepreneurial spirit. They love the early stage company. They were there themselves at some point, and somebody took a flyer and bet on them and let them, you know, open up the doors for their success, type of thing. So I think that my first sort of initial point to you is that the 12 key questions need to be exposed in the order that we're going to talk about today, because that's how the mind of the investor works. They need to be complete. You need to do all 12 of these things. And your purpose is to get the next meeting. You're going to also use this pitch deck mainly for investment, but you will see pretty quickly how you're going to be able to change it around to do a sales pitch in general for your company, a product launch, or any kind of sort of investment discussion that's not necessarily about capital, such as bankers or other backers of your company, including corporate sponsors. What you're going to reveal in your pitch deck is non-proprietary. So do not expect that you're going to get an NDA signature from anybody who is going to hear your initial pitch. Just make sure you don't put anything proprietary in it. And most pitch decks, it is unnecessary to put proprietary information in there. You will not need to do that, honestly. And you won't want to do it anyway. Later on, when you're having subsequent due diligence meetings, yeah, you're going to then be able to sign NDAs with people and try to protect your investment. Now, there is a preparatory course that we offered in the past couple of weeks, and that is how to be investment ready. So today, I'm not going to cover all of that, but I want to mention to you that KAST also has the on file that course that you could ask for, and you could spend, it's a 6-hour course on how to be investment ready. And that's preparatory to this course, which is how to prepare the best pitch deck. So let's begin with, first of all, a couple of opening thoughts about what should be your approach in your pitch deck. Then I'm going to get right into the 12 key questions. First of all, honesty, candor. It's very important that you do not oversell and don't spin it. You will be caught if you do. And I know most people know this, but I want to make sure that you really know that investors are used to seeing all sorts of deals. They themselves will see several hundred deals a year. And as a result, they're going to know whether you're spinning it, whether you're being unrealistic about the real problems and the challenges. So my first point that I would urge you to remember at all points of the process, honesty and candor. Secondly, simplicity. I think you should be very simple. Be a person who speaks with a few words. Don't make your slides too busy. Don't put too much wording, verbiage, prose on them. Use visuals. As much as possible, you can get your point across with good diagrams, good charts, and fewer words. That's the lesson. As to homework from today's session, the whole point of this 10 hours or to 12 hours workshop is that you will end up with a very high quality pitch deck. And so how the process will work is today we're going to spend 2 hours and we're going to go through each of the 12 questions in detail so that you can begin to prepare a draft pitch. And during the remainder of this course, we're going to be reviewing individual pitch decks by Zoom on a format like this. And we're going to review your pitch decks either in a group session, if we can assemble 2 or 3 or 4 or 5 participants, or on an individual basis. I will be spending one-on-one time with each of you. And so the homework from today is your assignment is to prepare your first pitch deck. And when you do that, I want you to email it to me, and I will then begin the review process with you. And we will spend the remainder of the 10 hours of this course in reviewing pitch decks so that by the end of the course, everybody who participates will have a high quality pitch deck that they can use, that's professionally vetted by me and other investors who over the years have built up this format. And you'll be able to use this to raise capital. Like I said, I won't guarantee that you will raise capital. No one can do that. But at the same time, you can know that your pitch deck will be of the highest quality, professionally respected out there, and something that the investors are used to seeing. They will understand what you're doing when you lay out the 12 key questions in 10 minutes. They will be very comfortable with that process and that format, and they will respect you greatly. The worst thing that you could do is to go on for 50 slides for an hour. That's not going to entice anybody to have the next meeting with you. They don't even need that. And so your objective is to get a great pitch deck together. That's 12 key questions in 10 minutes with very few excess wording and very little random conversation, but very specific points with good use of visuals and graphics. That's the homework. So here's what I would ask you to do. When you finish your first draft, please email it to me. And my email address is H2, the letter H, the number 2, at KutarnaCapitalCorporation.com. Kutarna is spelled Kutarna, Kutarna Capital Corporation, all one word, .com. If you email that to me, or you can phone me, you'll find my contact information from KAST. And we will then begin to book subsequent sessions where we work on your pitch deck. And hopefully we can do it on the Zoom format in this very setting so that everybody that's participating can see the progress that you're making on your pitch deck. It's also important that you get feedback, not only from me, but from the other participants in this workshop. And so we will be able to do that. And we'll ask you not to put anything proprietary in there. And of course, we'll ask everybody to respect the privacy and the confidentiality of everybody's pitch deck until it's ready to be put out there in public. So that's how we're going to handle this. And we're going to begin right now with the first slide. So using whatever platform you like, PowerPoint was the original platform that many people used. The object is to produce a 12 key question deck that you will speak to in about 10 minutes. And so I'm going to run through, first of all, what are the 12 key questions? Let's just list those so that you have a clear understanding of what they are. First of all, what business are you in? We call this the introduction slide. So it's about what business you're in. We'll talk about that. Second slide, the problem. Do you understand your customer's problem? What is the business problem you're solving? That's slide number 2. Slide number 3 is the solution. Do you have the answer to this problem? And what is that answer? The 4th slide is the market. Do you know what your market is? Is it big? Is it growing? What is the market? That's slide number 4. Slide number 5 is, what is the competition? It's a competition analysis. What are the alternatives to you and your product, and why should we pick you? This is such an important slide. You'll be very pleased to know that there are good ways to present your information to set you apart and distinguish you from the competition. The next slide, number 6, is the technology. What sets you apart, and is your technology sustainable? What are the tech details of your product or service? Notice that this comes in, let's see, 1, 2, 3, 4, 5. It's number 6 in the slide deck. It's not first. Too many early stage startups, including tech companies, believe that the investor cares deeply about their technology. It's true, the investor does, absolutely, but not as much as the business case. Why should I invest in you? Will I make money? Am I going to make money? As you know, investors want to make 5 to 10 times their money back in 2 to 3 years. In the first course, when we talked about, are you investment ready? We discussed that at great length. Why is it that investors need to ask for 5 to 10 times their money back in 2 to 3 years? So the moment you start accepting somebody else's capital, you're on a path to a rapid exit. And if you want to do a growth or what I would call a lifestyle business, you will not attract investment in this way. You may attract other kinds of investment, but anyway, that's the thing. So the technology, it's an important slide, but it's not the key story that sets you apart from your competitors. What the investor wants to see is, what is your deal? How will I make money from you? The technology is but one of 12 slides. The next slide, number 7, the approach to market. How will you find and get customers? The approach to market. Number 8, the revenue model. How will you make money? So what are your methods of making money? What is the revenue model that you will choose? Example, SaaS model, software as a subscription service, where people pay a monthly fee for your service that continually gets upgraded and so on. Number 7, the forecast. How much money will we make? And so this is your actual sort of financial simulation forecast slide. And the next one, number 8, the milestones. What is the milestone record of how you got to this point? And what are the key milestones that you will accomplish over the next, say, months or even the next couple of years, so that we can track where you are and understand what the milestones are that you're going to achieve. You'll notice that the milestone slide, when we get to that, is very interesting, because some investors, in fact, most investors today, invest on the basis of milestones. They will not give you the blank check for the entire amount. That used to happen 10 years ago. There were deals. I remember seeing a deal where a guy got 1.3 million. Somebody wrote him a check for 1.3 million. He put it in the bank and, began spending and began operating and kind of growing his business. Today, you might get it doled out in $50,000 or $100,000 chunks to achieve a particular milestone over a number of months. And that's how it works today. But the milestones, very important slide. Finally, number 11, the team. Most investors will tell you that the business plan, the technology, the market, and all that stuff, very interesting, very valuable, absolutely. But the key thing that determines often the final investment decision is who's on the team. Are you able to be resilient? Can you respond to the crazy business conditions that change all the time? A business plan we respect greatly as investors, we do. But we know that the business plan will go out the window within months. Look what happened in the last year. A pandemic created a complete different economy and an economic system. And so who was ready for that? Very few anticipated and were ready for such a thing. And so was your team resilient? Could they cope with that kind of a change? That's the test of this particular slide. And really the question is, can you execute? And then finally, the last slide, the deal itself. What's the ask? Are we a match? Do I know what you exactly want? And do I understand how you're going to achieve it? So that's a quick summary of the 12 key questions. We're going to jump in right away to question number 1. Slide number 1. What is your introduction? Some people call this slide the elevator pitch, and I don't mind that idea. So you could think of it as your elevator pitch. Really what you want to tell people in the first slide, and remember, it's one slide with very few bullet point words on it and some really good graphics and visuals. But what you're trying to tell people is, who am I? What do I make or provide? What do I sell? Who buys it? Why? And what am I asking today? So if you could imagine the old elevator pitch idea where you have 30 seconds or a minute, let's say, to repeat that. So let's just say you have a minute, 12 slides in 10 minutes. That's less than a minute each slide. Let's say your first slide, the introduction slide, is around a minute, 50 to 60 seconds. What you should do in this slide is you should tell people who you are, whether you have experience before as an entrepreneur, whether you have exited a deal in the past, whether you have raised capital in the past, and your various experiences that give us confidence that you know what you're talking about as the leader and the CEO of the business. And by the way, side point, the CEO is the one who must make these presentations. It is never credible if you send your CFO or another person, no matter how great they are, how trusted they are. Nobody in the investment community wants to hear from them at this point. They do later on, don't worry. They want to respect your team and understand later on. But right now, the point is, who's the leader of this business? We want to hear that person talking. And so in your introduction, who am I? What is my background? How many deals have I done? What do I know? What am I making? Who's buying it? Why do they buy it? You might even throw in a little bit of progress on where we are today. Have we got a prototype? Are we in beta testing? Are we actually in sales and we're seeking money for business development purposes, or to expand the sales and marketing team, or to enter into a new geographic area, or entering a new, putting a new product line out into the marketplace? That's all in the introduction slide. Also in the introduction slide is, what am I asking for? Amazing how many pitches we see where people aren't clear as to what they're asking for. So you need to be clear in your slide here, introduction slide. What am I asking for? I'm here today to seek $1.2 million in equity financing to expand the completion of to complete our product testing, and to create a marketing team that's going to take this into 6 world regions. Okay, as an investor, I'm sitting there, check. I check the box because I understand what you want. And don't worry, you can also ask for many things. You don't just have to ask for money in your pitch, although let's not get too complicated here and ask for too many things. But you could basically ask for team members, if you're looking for advisors, if you're looking for participants, if you're looking for a particular skill set in a CFO or a CTO or a CMO, you might want to find some additional talent and help. And so you put the word out that way, including inside of your investment pitch deck. That's a useful way to do it as well. So your introduction, the elevator pitch, what we can say about this slide is punchy, powerful, not overstated, respectful of your audience, but at the same time showing with, you could say, being proud of your accomplishments. What have you done in the past? What brings you credibility, so that the investor can trust that you, when you get my money, as they would say, what are you going to do with it? And do I trust that you're going to do something with it that's effective? The introduction also is useful to talk about what the company's name, where you are, what you make, specifically what you do. Again, amazing how many presentations we see where we're not even clear what the company actually does. So you need to be specific. You need to say, we are a manufacturing business. We are a software business. We sell services to the oil patch for productivity and efficiency. We make a device that detects low flow methane emissions. These types of things are so valuable and important. In this slide, you need to put all these points across. When we come back in future sessions to have reviews of your slide deck, we'll be watching, I will be watching, and so will your peers, be watching for clarity. Are you sure that you have explained who you are and what you do and what your track record is, what you make, and why do people buy it? Here's an important thing. It's leading up to the second slide, which we'll get to in a moment, which is the problem. If you can explain to me in the first slide why people buy your product, it intrigues me and it leads into as a natural transition into the problem slide. So for example, the situation is that you've got, I don't know, you're making a product that is, let's say you're a game developer. You're making a game that has huge take up. In beta testing, it just grew from 20 trials to, I don't know, 1,000 overnight. So many people picked it up. Well, that's already a situation that tells me that you're solving a particular problem in the marketplace. And so in your introduction, I need to know why people are buying your product. Okay, so that's kind of a quick summary of slide number 1. And if there are any questions, please put them in the chat and we'll be able to answer them. And we're going to go right away now into slide number 2, which is the problem slide. The second slide, which we call the problem slide, is really, do you understand your customer's pain? So when you ask yourself that question, recall that the investor is really interested in what the answer to that is, because we want to know whether you're solving a real business problem or not. Many, many deals come to us where the person is enamored of a certain technology. They love their technology. They are developing this really cool technology, but it's not clear who actually cares about that technology out in the marketplace. And so like I say, sometimes people come to us with a technology and they're interested in, we want your investment in our deal. And we've got this cool technology. Well, who's buying that technology? Who's interested in it? Whose problem are you actually solving? Well, we're still, trying to flood the marketplace with knowledge about our cool product. You see where that's a trap, because that proves that there's no real interest in the marketplace for your technology or your solution. You're not really solving a real problem. So let's turn it around in the positive, which is show to the investor in this second slide, the problem slide, what is the actual business problem you're solving? For example, if you have a technology that's solving a real logjam in productivity, you're actually cutting, the time of a particular process in half. And this will then allow the customer to make more money because they can get the solution out quicker to their customers, or they can solve the delay, the time crunch problem that is so frustrating to many customers. Then we're really interested in hearing more. A couple of other tips about this: quantify and qualify the pain that your customers is experiencing. If you could show that the customer's experiencing, hundreds and hundreds of complaints, or there's, so and so many houses or units or people are affected by this, and if you can fix that problem, suddenly it all goes away. That's the kind of thing we want to hear. We particularly want to hear costs. If the pain and suffering that the customer is, experiencing, what we want to know is, what is the annual cost of that? And so, for example, let's say you have a solution that is something to do with medical. You're providing a service or a product or a device that solves some kind of a medical problem, that removes people from workers' comp processes, or saves on insurance premiums, or cuts the cost of the the medical service, cuts the cost to the taxpayer. If you can quantify that, it's really powerful for the investor. So already in the second slide, we've checked the second box here. If you can show us that there's actual pain out there and suffering in the marketplace, your customers actually have a real problem, and your solution is fixing that problem for them, and it's reducing their costs, or eliminating an expense, or adding revenue, or speeding up a process, or doing something that's generally going to help the situation, then we're interested and we're listening. It's important that you set the stage for how big the problem is. How many people, how many dollars, how many units, how many minutes, how many hours, how many days. Quantifying the problem in that way and showing how big it actually is, trying to get your arms around how big this problem actually is the key thing here. We don't want you to confuse the customer pain with the market for your solution. Remember, the customer pain is not the market. The market is that which is going to solve that. And so there's a little bit of, it's a subtlety. Sometimes people will talk at length in their pitch about generalizing who has this pain and suffering as if that's the marketplace. It's not the total marketplace, it's part of it, but the marketplace is actually those customers who will take your solution and use it to solve a business problem or a personal problem that they have. That's a very subtle thing. Investors pretty well know that point, and they will watch for your the capacity that you have to sometimes overgeneralize about that. And the other thing is about the problem that you're solving. If you can show that it's a growing problem, in other words, that it's a serious problem that's growing, and that there's perhaps, if there's no solution to be found, then the problem is only going to get worse. Now, in a sense, that's not a happy thought, but we, the investors, want to hear that. We want to understand whether this is a big problem, if it's growing, and if it's something that needs a rapid solution. And here you are with your great solution for it. Then that's exciting and that's informative for us. And so, talk about the pain in a very specific way, quantify it as much as possible, show you understand it, show who the actual customer is and what the true market for it is. And then you'll understand the investor will understand the buying motivation of the person who's going to buy your product, your solution. And that is going to be a very, very important point. Well, the next slide is really starting to get interesting for the investor, because now we're going to see how you solve the problem. So the third slide is the solution slide. And what you're saying here is that you actually take the pain away. You solve the problem. And so you're going to identify that you do solve this problem. That's the key thing of your third slide. You're going to show here what your solution does to make the problem go away. Notice that's not how your solution takes the problem away. That's for a later slide, for the technology slide. What you want right now is to describe what your solution does to make the pain go away. And when you do that, you need to use, the lesson learned is to use action words like, we eliminate errors, we reduce the time necessary, we increase efficiency, and we look at alternatives and so on. Important also, how much money does this save for the customer? For example, a famous sentence, our product will save an average customer X dollars per year. That is a key statement. If you can say something like that in your solution slide, you're checking a box already in the mind of the investor. And if you have already done this, you're on your third slide, you've already got 3 boxes checked. The investor, believe me, continues to show interest in your deal. They want to see the rest, of course, but this is the thing. If you can show what do you do to make the problem go away? First of all, those key words, those sharp little pointed statements, and then translate it into how much money you solve. Now we're talking that sort of key thing about money, finances, real cost to the economy. That's going to be a signal for the investor, because if you can translate it into dollars, then they can do the mental calculation of what their investment is going to produce for this company in terms of growth, and then how quickly it'll grow, and so on and so on. If you have customers that already have used your product, like you're already selling this product or service, and you have customers, and you can show maybe testimonials, or you can show satisfied customers, or you can indicate to your audience even in this slide that you would be happy to put them in touch with existing customers who love your product. Once again, it's another box checked in the mind of the investor. If you can show compelling reasons in this slide for why we should buy your solution today, that is going to be very helpful. Here are a couple of things that you don't want to do in this slide. You don't want to use detailed technical terminology. Don't use jargon or industry specific acronyms, that sort of thing. Remember, don't disclose any secrets at this stage of the process. You don't need to put any proprietary information out there at this point. And so if you do this well, the investor's going to hear that you solve the problem. What do you do to solve the problem? Quantify it as much as possible. Money is the most important thing, but time saved, steps saved, problem solved, rework solved, that's all important too, the most important being money. And so if you can produce that and customer testimonials, now we're interested in further. We've checked off that box in our minds and we're interested to hear more. So the next slide, number 4, is the market. The really key point that you want to get across here is the market attractive for your product, for your customer, and for us, the investor. And so the key indicator is it a big market and is it growing? If you can show me that it's a big market and growing, then I'm really interested. And certainly, you know, this is where people have talked about the BHAG, the big, hairy, audacious goal. How big is the ultimate market is something I want to hear. And if you can quantify that by dollars spent or the number of customers or the growth rate of the market, then you're starting to prove in this slide that you understand the market for your product. This is complicated because sometimes it's impossible to find this information, or it's seemingly impossible because it's not publicly available. It's never been studied by any kind of a consumer group or an industry analyst group. And so it may require you to do some sleuthing and to figure out what the market is all about, especially in terms of global markets or product markets in countries that we are unfamiliar with as investors or that we don't understand. And so it's important that you figure out the size of the market, how quickly is it growing, what are the trends in that marketplace. If you can show us that there's a certain recession proofing feature, or the market is growing, 10 times more rapidly than any other index out there. If you have a study that shows that some industry analysis group that shows that the market for such and such a product is, X billions of dollars a year, growing at a compounded annual growth rate of 35% a year. If you can find that kind of statistic, that's very important to us. And you can see how in a slide, a simple slide, it can be easily portrayed. For example, you want to show realism. And so one of the ways that we urge you to put your information together is you would want to show the global market first for the product. Then you might want to show, for example, the Canadian market or the American market, and then the Alberta market, or even a regional market, going down to the level of number of companies. For example, for my product, I can tell you that the world market's going to be X hundreds of millions of dollars, but the Canadian market is this, the Alberta market is that, and the top 200 oil and gas companies in Alberta are a market representing X millions of dollars for my product. If you can show that sort of a sequence of thought, then I'm really interested. And important thing here is the units. So show me in this market slide dollars or units. That's important. And many startups, I guess this is a comment I would make, many startups don't understand their market and they haven't done their research, and they claim that it's difficult to do the research. Well, yes, it is very difficult. And the point is, if you've made some sort of attempt to understand the market, you will have done more than the typical investor has done. It will be rare that an investor sitting in the room hearing your pitch is going to know more about you, about the market, than you know. That's pretty rare. It does happen. There are some experts out there that are seeking, pretty cool deals in a particular market that they understand. That's typically not the case. Most investors that will hear your pitch are generic investors who want to understand what you're talking about. And so you should be careful about that point. If you have a market that is fragmented and has many different aspects to it, such as many geographical territories, many product variations, many types of companies, then it's important to start to narrow your targets and come down to maybe the industry or the segment size, picking maybe the most important, the fastest growing segment first, and then the second and third, and so on. So the more detailed knowledge you can portray that you understand about the market, the more interested I'm going to be, and the more likely I'm going to check off that box in my mind. What you don't want to do is chase multiple markets or segments at once. And so if you come to us as for an investor pitch, and you tell us that you're going to, hit Canada, US, and Europe and Asia all at once, we're going to say, no, you're not, you can't, it's impossible. Nobody does that. You have to do it in sequence. And usual sequence is regional first, national next, international third, or segment one, which could be the largest, the fastest growing, the most important, and then segment two, and then segment three. That's more sensible, even though in the excitement of the entrepreneurial mind, and we do respect this, you feel that you can tackle the whole world all at once, but you can't. Everybody knows that you can't, unless you're well capitalized. And if you're well capitalized, well, you don't need to come to angel investors. And so there's a little bit of a logic trap there as well. What you're talking about here is segmenting the market. It's a classic market segmentation analysis. The better job you can do of this, and the better you portray it in a summary form on this slide, the better off we'll all be. The investor will be most interested in this. Don't get too complex though. We're not trying to ask you to prove it. Later in due diligence discussions, we may want you to speak at greater length about, that particular marketplace and how you've segmented it. Summary point about this slide, we want to see that you understand your market, that it's big, that it's growing, and that you understand the segments of it, and that you understand the sequence in which you would tackle that market. That's all quite possible to do in this slide, and it's something that you're going to find to be quite useful to the investor, because we will check off that box, and then we're going to be moving on to the next slide, which is the competition. We want to know who else is playing the game. When we hear you speak about the competition, then we're going to understand all these boxes that we've checked off so far in the context of who else is playing the game. And obviously, the question on the mind of the investor is, are we going to put money into your deal, or are we going to find your competitors and put money into them? And so you want to portray your status among your competitors in a particular way. And one of the ways that we do that is we want to see the most favorite slide, honestly, in this area is to have a 4-quadrant slide with, on the vertical axis and on the horizontal axis, some kind of a feature analysis or price or ease of use. We can talk about this in detail, but you're trying to show that in the upper right-hand corner, the northeast corner, is your product, your business, compared to all the other ones. We want to know what the key differentiators are. We would like to actually have you name your direct competitors if you know who they are by name, so you can put their brand logos in, and you can kind of show us that you understand where you place by important features. So, it's hard for me to give you a sample right at this very moment, but usually price is important, or ease of use, or number of product features. If you can differentiate yourself from the competition along those methods, then we know that you have the superior product. And so it's a tricky thing. I'd be happy to work with you on each of your, as you work on your individual slide with this one. Things that you should not say. And there's a surprising tendency for people to do this. I don't understand that exactly, but it's there. We don't have any competitors. There's no direct competitor. There's nobody in this field. Not true. Cannot be true, because even the status quo is a competitor to you. the inertia, the resistance to change, the friction of kind of even making a move is often a point that, is a competitor to you. So that's the easiest point. Um, but it also, if you say that there are no competitors, then we don't think you've done your research. We don't think you've analyzed whether there is a competitor, or maybe it says, this is scary, maybe it says that there isn't a market here. And so we don't want you to, we don't want to hear that. And if you identify that another problem to avoid is identifying that your market is a giant like Microsoft or Google is my only competitor. That's not, we don't believe that either, because it shows us that you're either chasing the wrong segment or your strategy is incorrect, because you can't possibly have a single individual product whose only competitor is Google. Now, has it ever happened in life? Sure, it has happened. There's probably, you could name, we all can name various products that were so leading edge and so disruptive and so quick off the ground that they resulted in some sort of an acquisition by these giants. But it's rare. It's pretty rare. And your key message then should be showing your place among the competitors by a series of features or comparisons on as to price or ease of use or effectiveness or simple to use features that are not known, that sort of thing, and identifying your competitors by name, but driving home the key message of what the advantages are over your competitor. And so here, once again, we're looking for key words, sharp kind of keywords and phrases, easier to use, faster to deploy, quicker arrival, customer can set up by themselves. Testing is, the features of this product more accurate. Let's say it's a testing product, more accurate than all the rest. Accurate to, multiple levels of detail beyond what everybody else is doing. That tells us that you have knowledge of your competitors. You need to show respect for your competitors because they're all in the marketplace too. And if they're all in sales, that means that somebody's buying their product for some reason. And so you need to show that you can compare strengths and weaknesses, but don't mock or ridicule your customer, your clients, as you know, your competitors, excuse me. Don't mock them. That's a serious problem. And it's something that you never know who's sitting in the room. They may be somebody who's already a customer of that particular company. So the competition slide is an important one, and it's something that you will again take great care and attention to show us that you know what the competition is and that you're honest and accurate about it, minimizing the weaknesses or the strengths of maximizing the weaknesses and minimizing the strengths of a competitor, not necessarily the way to do it. It's to show us that you know accurately what's going on. And if you can show and demonstrate to us that the features and the ease of use and the pricing and the efficiency and all of that of your product is superior to that of the competition, we love to hear that. That's an important message and we love to hear it. The next slide, number 6, technology. At the completion of this slide, interesting thing, you're halfway through. In a 10-minute pitch, you will have taken 5 minutes to say everything that we've just talked about, including this technology slide. That's a huge challenge. And we haven't yet even talked about how many times you're going to rehearse this pitch deck so that you appear to be speaking naturally, not reading from the slides, not facing the slides, but rather facing your audience or the listeners, the viewers, and also that you're not speaking too quickly. You're not rapidly kind of trying to cram as many points as possible in or reading lengthy wordings on slides. The art of this, if you can imagine what we've talked about so far and what we will talk about in slide number 6, the technology, if you can deliver all that in 5 minutes, you're doing very well. But remember, the audience, the investors can keep pace with you. They get it. If you can unfold all this, fewer words are helpful. More words don't help, because we want to get the salient points. And if you can do the bullet point talk, like we've just been trying to express here, you're going to be well underway, and you're going to be well, positioned to get us to check all the boxes and ask for the next meeting. So the technology slide. This is important because, as we said a few minutes ago, it's not the preeminent slide. We, as investors, love your technology. We are impressed with it. We want to understand it, but we don't think it's the key thing. We think it's one of the key factors, yes, but it's the whole picture, the 12 slides that matter to us, and really the business proposition. How can I make money with this deal? That's the key thing that's on my mind. So if you are dealing with the technology slide, we need to understand as investors how you have protected your market or your product once you have penetrated that market. So we want a high-level description of the technology. Do not go down a rabbit hole of too much detail, because we don't need it at this point. And we probably don't even understand it, honestly. If you have technical knowledge that is superior to that of the average person, the average even professional in your field, we won't know it either. But we do understand a lot about technology and software, and we do understand what it does. And so if you can describe that, what it does to us in a clear way, we'll get it. If you can also show us that the product and the technology can be developed further, enhancements can be made, versions can be made. We love 1.0, 1.1, 1.2, 2.0. We love that because it's all an opportunity for incremental revenue, but it also is an opportunity to enhance and improve the product with technology that evolves and moves ahead. So it's all good. We also prefer platforms. If you're a kind of a, I don't know, let's call it a one-trick pony, where you just have a certain technology and it's maybe, I don't know, an app. Apps are interesting, but they're not that interesting because they're not a platform. They don't have a variety of technologies serving a variety of segments of the marketplace, something like that. Also, we want to know that you can scale your technology. So does your technology help you to scale your business? And can it scale the business in a way that improves the margins? So one of the features of companies that we don't like to invest in are those where there's a linear kind of progression and a linear relationship mathematically between growing revenues and costs. What we want is to see incremental revenues, yeah, but we want to make sure that the costs are under control and that scaling happens. The definition of scaling is not what most people think. Scaling is not just growing. Scaling is growing and protecting margin and increasing margin and reducing costs. Thus, cost per unit decreases matter to us greatly. And that's something that we really want to see. Staying ahead of the competition is a key feature of your technology. Are you the first? Are you the fastest? Have you left the others in your wake? For example, if your technology has required you to spend, I'm just making this up now, 2 years to put it together, and you found that 2 years is what it's going to take the average person to try to catch up, well, then you have great advantage to the marketplace, and we love it as investors. We think that's fantastic. And so we're very interested in speaking to you because it'll take your competitor 2 years to even catch up. But if there's somebody nipping at your heels and they're right behind you by several weeks, that's a higher risk for us. So we want to be very, very, very careful about even considering that investment, because the competitor might be smarter, better, faster, or maybe more well-financed. If you have third-party partners that you're partnering with, that is an important feature. If you have, I don't know, a large telecom, a large communications company, or a large software player that's interested in your technology and is willing to partner with you, or even to potentially exit you, in other words, buy you, now we're really interested, because we can ride with you and we can exit, and we'll all be very excited to make a lot of money. We also want to make sure that your key asset is protected. So whether it's a product, a process, an algorithm, or whatever, we want you to make sure that you're legally protected. And that would be by patents, copyrights, trade secrets, um, holding your intellectual property in a secure, safe place, perhaps even structurally in a different company than your operating company. All these are ways that we want to make sure that you have protected your technology and that it's going to be there not to be scooped by somebody else. There's always the danger and the risk of somebody stealing your technology, yes, but we want to make sure that you've taken all the standard ways to protect that and save it. When you talk about your technology in this particular slide, what we don't want you to do is to talk about, as we say, bits and bytes. Let's not talk about too much detail, and also save the descriptors for later on. If you say too many times, and we understand it's a cool technology, we all say that, it's a common phrase, that's a cool technology, it's really cool, or it's really clever, it's really sharp, that technology. True and good, and we don't mind you saying it, but that's not your key point. The key point is, how are you protecting the technology? How fast are you moving with that? Is it scalable? Are you ahead of the game? And what does it actually do? And can it be improved, and can it be scaled up in its own right? Can you have different versions of it? Can you make evolutionary kind of impacts on the technology, and even improve it much further? We're also interested in making sure that you have data from your technology. That's a feature that is little talked about, but more and more companies are requiring that you, or investors are requiring that you actually have data that you capture from the use of your technology. We also want to know in this slide whether the technology is usable easily in the field. Is it easily adaptable? We have found as investors, there are many, many technologies out there that are fantastic technologies. They're even cool, but they don't easily get accepted in the marketplace. And a classic example is the oil patch. There are many, many processes in the oil patch where efficiencies are at stake. People want to, improve the process, cut the time down, shorten the process, eliminate steps, make it easier to understand in the field so that the average employee can take it and, out of the box and use it. And if that's not the case, if it's complex, you've got a problem. Even if it's simple to use and very effective, sometimes that stickiness of existing processes, a lot easier to just stick with the existing process, even if it's paper and spreadsheets, as opposed to some wonderfully cool technology. Your challenge is to show us that not only is it easily adaptable and scalable and all these things we've just said, but that it will be accepted in the field, or that you have a way of easily having it accepted in the field by employees who are implementing it. That's a solution. It's a very good solution. Final point I'd make about the technology slide is you need to show us that it's incremental and it's not just trivial. So if you have a particular, let's say an industrial process, and your technology produces an efficiency in it, that's great. We want to hear about it. But if you only produce, I don't know, I'm making this up now as an example, 1 or 2% increase in efficiency, or you speed up a process by minutes in a multi-hour or multi-day process, kind of seems insignificant or trivial. We'd like to avoid that. So show us what the technology does to improve a process in terms of units of time or dollars or steps in a process, but show it as being significant. If it's not, we will be unable to check that box. That's all there is to it. And so it's important that you try to show us effectively what your technology will do. And the final point, intellectual property protection, very important. It's something that it almost goes without saying that some investment must be given to that so that you do not run the risk of somebody coming in and scooping your technology. So the next slide is the approach to market. Simply put, this slide is all about, can you find and get customers? What you want to do here is you want to restate the target customer who has that pain that we talked about, who's got a problem that has to be solved. Be specific here and explain your go-to-market strategies. And this is simply something like this. How will you get in front of your customers in the short term, medium term, and long term? How will you get in front of your customers? Will you use direct sales? Will you use channel partners? Will you use resellers? If you already have customers, it would be important to identify them right now. And even if it's somebody who bought the first 5 or 6 units of your product, who are your customers? Give us a name. Give us a, if you can't name them, give us a generic kind of indicator of who they are so that we know that you actually have them. If you have partners, identify who they are and describe how they partnered with you. If you want to mention, some large communications firm, for example, that has partnered with you, this is very important because their power in the marketplace can leverage your smaller power in the marketplace. We want to hear that as investors. We don't want you to say that. There's a couple of key words we don't want you to say. We don't want you to say that we're going to sell to everyone. We want you to focus on the key customers. And I think there are still deals that we see where people say, well, everybody's a customer for this. No, not everybody is a customer. That doesn't even exist anymore. And so it will be important not to say that. And don't say it'll sell itself. There are some people who continue to tell us that the popularity of the product is so fantastic that it will sell itself. And remember another key thing, when you're talking about the approach to market, we don't want you to sell the technology as the solution. That's not the solution. That's the mechanism by which you're going to solve a business problem. So don't sell the technology and don't sell the features. Sell the benefits. Sell the benefits, not the features. The whole objective of this slide is to show the evidence that you can get customers, and you need to show us how you're going to do that. The question always comes up, should you test that? Should you be able to say to investors, yeah, I've tested this. I've done a focus group, or I've done a sample sales process using a channel reseller or some other method. When you show another method and you have tested it, we want to hear about that as well. Even if it's a modest test, even if you say, look, we tried 3 calls to this type of customer using direct sales, and we used a direct sales method of telephone, or we phoned, we had an internet connection, we sent emails, we did it on our website. We want to hear all that because it shows us that you understand how to approach the market, and it shows that you have tested and tried it, and that you have the discipline and the kind of process in mind that gets the solution to this very quickly. I think the last thing I would say about this slide is we want to know how you're approaching your customers and who you're approaching. It's important for us to know that you understand whether it's a regional customer, a global customer, or some other larger entity. How are you approaching them, and what are you doing right now, even though at this early stage, maybe without capital or maybe with a little bit of limited capital? What are you doing? And then, of course, what you will do. This will come out later in the milestone slide, but it's also important to put it in here. What you can do if you get our capital. That's an important point. The next slide is the revenue model, or the business model. And this is actually important because we want to know how you're going to make money then. So we talked in the previous slide about how you're going to approach the market, but how will you actually make money? And so if you're doing, for example, a software thing, you're going to probably tell us that you're going to use a software as a service, a SaaS model, where you will sell subscriptions to your product based on an annual, usually, or semi-annual fee for a basic product. That means the maintenance fees, the services, the basic terms of the product. We want to hear that you have upsell potential, that you have multi-tiers. We love to hear that sort of thing. We want to know if the subscription base is recurring in the sense that there's an automatic renewal, or that it can be renewed automatically. And is the revenue periodic and one time, or is it recurring? This is the key thing about this particular slide. Recurring revenue in a sense, it's not automatic, but it's recurring. And so that means that there's a scaling factor. And so you've again corroborated what you said a few minutes ago in a previous slide about whether this business is scalable. And then it would be important for you to tell us what you charge. And so if you can tell us in actual dollar terms, we charge, $12 a month for this, and we have 3 tiers, and you can buy a $12, $15, $20, and $50 a month package. And here's what they include. That intrigues us as investors. Now we're interested in micro details. At this point, we already have checked off a number of boxes in our minds, and we want to hear these kind of detailed information numbers. We would also want to hear about target margins that you're projecting, channel revenues by channel. We'd want to know about your sales cycle. How long does it actually take from that first introductory call, the cold call, all the way to the buy decision? How long does that take? Can it be shortened? Is there a way to, quantify that? Show how the money flows between yourself and your customer, your partners and you. And a visual picture of this is very important. It's important that you don't get overly complex in this, and don't invent a new model that hasn't been proven. Investors might be fascinated by that as an intellectual exercise, but if you say to us, we're not using the SaaS model, we're not using a direct sales model, we're not using channel partner, we're going to actually invent some other method of putting this product in front of a customer. Like I say, we'll be intrigued, but we won't be interested in investing because it's unproven. When you're looking for angel capital, you're looking for early stage investors at a very high risk part of your life cycle. And so the last thing you want to do is tell us that you're inventing a new revenue model. We won't really believe it. We'll care about it, yes, and we'll applaud you for it, but we won't really be interested in investing on this basis. The objective is to prove that your business has a way to make money. If you can check off that box in our minds, then you're ready to move on to the next slide, which is the forecast slide. This is the actual pro forma financial statement forecast using everything that you've just told us about the market and your business revenue model. What is your actual forecast? We would not want you to show a complete financial statement on this slide, but you can show an abbreviated one. It's pretty cool to show a 3-line slide. Line number 1 is revenue across to the right-hand side, the horizontal axis, revenue by year or by product or segment, if possible, but usually just by time, by year. And then on the vertical axis down, literally we want to see revenue, a row for revenue, a row for costs, and then a margin. And possibly the number of units sold or the geographic markets penetrated or something like that. We want to see that the expense side is well thought out. We want to know that underneath that slide, you have 25 other slides with much more detailed financial spreadsheets where you're doing forecasts, and then you can forecast various scenarios, high, medium, low, or by product differentiation or by market segmentation. We want to know that you have all of that underneath, but it's sufficient only to show us at this slide that you understand revenue and can project it forward, expenses, and you can project them, and then margin. And once we see that, we then quickly understand as investors whether you've got a real business that's scalable here, that actually produces margin per unit as you increase volume, and that it doesn't include any other kind of quirks such as problems with sustaining demand or warranties or things like that that hit us. The question is always asked, can you show a hockey stick curve? Sure you can. We love hockey stick curves. We want to see that. The wisecracks that investors may make about this are that the hockey stick is something that, it's automatic. Everybody puts a hockey stick in there. Year 1, it's $50,000. Year 2, it's $250,000. Year 3, it's $10 million in sales. Well, if that's true, and if you actually have forecasts that back that up and can show us that with our investment, the added sales process, the people that needed to sell, or the different sales tools that you will need, the shortening of the sales cycle, other things that you can do, if you can show us that this hockey stick is realistic, well, we love it. We think that's a brilliant idea and we want to support it. But if you show us a hockey stick and then you really don't know what you're talking about, and you say that it'll sell itself, or that it's going to be explosive growth on its own basis without any kind of marketing, or any kind of ability for customers who take you up on it to communicate with each other and to show demand, it's not going to be believable. So we want you to build your forecast, by the way, from the bottom up. So using a very simple process. Here's an example. If 3 salespeople making X number of cold calls per day, closing at the rate of X% over a sales cycle period of X number of months will yield the following sales, then we believe you, because we know that you understand then what it takes to make a sale. You have to have a sales cycle, you have to have a certain process, you have to have certain people or systems involved in it, and it's all going to take time and money. And so if you can show us that from the bottom up, you understand how you're going to produce your forecast, we're really interested. And we can spot that very easily. So it's important that you show us that. Don't do forecasting from the top down. Don't say that your numbers are conservative. We don't want conservative numbers. We want realistic numbers. And so don't say conservative. We may ask you later on in your simulations to do high, medium, low, conservative, moderate, whatever. But right now, don't say that you're using conservative numbers. That's not a convincing point for us. Don't build top-down numbers. Don't say the global marketplace for this product is 50 billion, and in the North American continent, it's 12 billion. And if we get only 3% of the market, our revenue is going to be such and such. Don't do that. That's not even believable. And really, even if it were believable, it's more of a hope than an actual strategy. And you've heard this before. Hope is not a strategy in business. It's bottom up, so and so many salespeople at so and so many calls per day or per hour, close rate of such and such, over a period of time gets the buy decision. That's what I want to hear. And if you show us huge runaway margins suddenly increasing for no apparent reason, we won't believe that either, because we know that margins don't increase miraculously for no reason. There's got to be a reason. Either the technology produces a much better solution, or you have a faster sales process, or you have some other way of controlling costs and boosting price so that margin is not only protected, but increases like crazy. That's, be careful about that. Optimism, great to see optimism, but this is not the place. This is a place to be realistic. And it's important that you don't show us unreasonable assumptions. As long as you can back it up with reasonable methodology and a reasonable set of assumptions, we'll understand that, because we can take those assumptions and we can work with you to modify them. We can say, okay, great, you've made this assumption. What if it's way better than that? Great, you can run those numbers. What if it's worse than that? What if it's worse by half? And then you can work on that. That the investor, in other words, doesn't want to hear your sort of hopeful number in your forecast here. We want to know what's reasonable, yes, but we also want to know what happens if it gets better or worse, or the conditions change, or various scenarios change. So what you're trying to show us is that you have the ability to forecast and simulate a lot of different scenarios. That's the key thing we want to hear. And of course, we want to see your projections, and we want to understand what you think is reasonable. And we love the hockey stick. We do, as long as you can defend it. The next slide is very important as well. The milestones. Can you execute is one of our questions at this point. If you've checked off all these boxes in the past few minutes and in the previous slides, then we're interested in, what are the milestones? So on this slide, visually important to show what you have accomplished as key milestones in the past. What have you done over the past, let's say, months, or even the past couple of years as a startup to achieve key objectives. So have you had your first product developed? Have you had your first beta test? Have you had your first customer? Are you now in revenue? Are you now profitable? Are you now at break even? Those are important milestones. It's really important here to show traction. And the way we show this slide is typically a horizontal or a vertical, a line moving up towards the right that has about 7 to 10 key milestones. We don't need a lot of detail. Later on, we might ask for 100 milestones, but at this point, we want to see about 5 to 10 key milestones. And in the middle of your slide would be the present date, so that you've got some momentum from the past that you're showing, and then you have momentum into the future. What are the key milestones that you will achieve over the next 6 months, 12 months? One of the reasons this is very important is because sometimes the investor will invest according to milestone basis. And so that means that we will not just give you the blank check for the full amount of your request, but we might say, okay, you said that in 3 months you're going to achieve the following level of product sales, or you're going to finish the development of your product. The R&D phase finishes, and then you're now going to go into selling. So we'll give you X dollars now, and we'll expect you to, produce those results. And then later on, we'll evaluate those. And if you've achieved those results, well, then we'll give you, we'll dole out a little bit more money. So this is the kind of standard way that this milestone slide works. It's important for you to be able to show us product milestones, customers, markets achieved, team members recruited or added, maybe the size of the team has increased, strategic relationships that you've signed up, or product versions that you've released. This is all important. The future milestones are important as well, because they show us what you're going to accomplish with our money. That's what the investor is trying to see here. And we want to see a logical progression. We want to see that on the basis of adding an investment, you're going to, you're going to meet the various milestones and the guideposts that you have set up. We want to know that you have metrics possible to describe your success. So we don't want just qualitative. We want either revenue numbers or units of sale or some kind of feature that's been introduced. We don't want you to get into too much detail, and you don't want to overhype this. Rosy milestones are not really, they'll come back to haunt you, but realistic milestones showing traction, showing progression, not trivial stuff, but good, solid milestones are what we want to see. And we want to see them tied directly to our investment. So when you're talking at the end and the very beginning of how many dollars you're seeking as of our capital, we want to know that that will be used to achieve these milestones. And so don't take your milestones much beyond that which can be financed by your ask. That's the key thing here. At this point, we've reached slide number 11. So by this point, if you have had a successful pitch, you've done it well, you've spoken clearly and briefly, and you've got good graphics, and we understand that you've unfolded these points and we've checked off these boxes in our head, it's possible then that we're already nearly the point where we've made a decision to follow up and have another meeting with you, which is, of course, the objective of this whole thing. Why you want to produce a good pitch deck is so that you can get the next meeting with us. And so the team comes next. If you can show us all of the things that you've now done to this point, and then you can show us that you have the team of people that can execute this, now we're very interested. And so you want to show, the most common way is to show a photo of the 4 or 5 or 5 or 6 key people on your team: the founder, the CTO, the finance person, maybe the marketing person or the product development person or something like that. It's also important to show your advisors. If you have a blue chip group of people that are good advisors to you, you might want to show them, because it shows then that you're coachable, first of all. Second of all, it shows that you have the smarts to figure out who the industry leaders are or who can give you the best advice, and that you've assembled them and that they are actually working with you. That's a sign of credibility of your deal if you've got some pretty impressive names. The problem with most team slides in most companies is we don't even know who these people are. Unless you have big name staff And unless you yourself are a big name that has done all sorts of fancy deals before, we don't know your team. And so simply putting their photos and their position, even if they have great backgrounds, it isn't necessarily going to help us understand why this team is so great. And so what we'd like to suggest that you do is show those photos and the names. Yes, all of that is good. But why does 1 + 1 = 3? That's what we want you to show. So particularly if you have, let's say, 5 team members that have worked together on 2 other startups previously, now we're interested because we realize then that the team has worked together. There's some harmony there. There's some unity there. There's some alignment there. And what's the point? Well, if they've done 2 deals together and they're now on the 3rd one, that must be a pretty good team. Either that or they suffer punishment well as a unit. But the point is, if this is your 2nd or 3rd deal with the same people, either those previous deals failed, fine, that happens a lot. Most deals fail. 90% of deals fail. If they're able to stick together, even in the face of past failure, that doesn't necessarily mean that it's a poor team. Now, we'll try to figure that out as investors. Yes, we will. But we know that if you have failed in the past, you're not likely to assemble the same group of people. We understand that point. So it's against human nature to suggest something like that. So what we want to see is, why does this team produce better results? So past experience counts. Past successes count. Obviously, if you have a powerful team that has made 2 previous exits, it's exciting for us to hear that, and we believe that your team will be superior to most other teams. We also want to hear things like that you have worked together, that you can work together to make decisions more rapidly, or that you are resilient together, that when failures happen or your business plan gets blown out of the water for some reason, you can respond, regroup, and get back to it. Or we want to understand that your team has a particular trust factor in each other that is born from other relationships or other experiences they've had in life. You can see what I'm suggesting here. It isn't just portraying the people and their background. It's showing the investor why that particular team can achieve the objective in a better way than others. Similarly, with your board of advisors, it is not just, well, it's not as valuable for you to show us that you have all these advisors. Everybody has a tax guy and an accountant and a technology advisor or a finance person. And even if not everybody has an advisory board and you're the only one that has an advisory board, it's not sufficient just to show those names, but it's important to show us why they are more effective together, because they all work with similar customers. They all are specialists in a certain niche of the economy, a certain type of business, a certain type of startup, or they have professional expertise in building a company that is, starts off in Canada, let's say Western Canada, and then it's going to move into the US next month. That's important. And that shows us that you have selected your advisors, not just for their professional competence, which we expect and hope that you would do, of course, but that the team of advisors actually is effective at your particular type of company or your particular type of product, and can actually work and understand. It's even best of all if you can show us that your advisors have actually worked together. And it's rare, it's very rare that people get their advisors in the same room and talk to them about a challenge or a particular strategy for the business. But that's the most savvy of entrepreneur that does that. And that's what we want to hear from your group. We want to see that you have advisors also who have done this before. If you have individuals who are, let's say, angel investors or super angels or people that are very expert at looking at deal flow, we want to know that, because we want to see then that you have surrounded yourself with the thought leaders in your industry. That's important, and it shows that you have the guts and the drive to do that. It's also important for you to show us that you have the flexibility. We're not saying that you have to change your staff or your team, but sometimes advisors can be brought together for a particular phase of your company, and we want to be sensitive to that. For example, if you have startup advisors, for 1 or 2 years, and then you change that advisory board, or you augment it with a product advisory board or a geographic penetration market strategy board. You can have more than one advisory board, and you can change the people on those boards to take into account various circumstances and situations in the future. That's important to us too. We want to hear that. We want to understand that you know how to use wisely those resources that are out there. And we don't particularly need to know, or it doesn't matter that much whether you pay them or not. Although it does matter that in the cap table, if you're giving away shares, we do want to see that, and we will do that in due diligence. We will understand that as we proceed into due diligence. Well, now we get to the final slide, slide number 12, remembering that it's taking only 10 minutes to do all of this. Very challenging. The final slide is kind of you could call it the deal slide, or in some people's minds, are we a match? Because the investor sitting in the room listening to you has already checked off, or not, a lot of boxes, 11 different boxes in their mind, and they now understand whether they want to have this second meeting with you. So this is important that you just give a little summary. And the most simple summary that I could give right now about what this final slide is all about is something like this. So in summary, what we're here today asking for is $1.2 million in equity financing, $300,000 in debenture financing, in order for us to add to our sales team and add growth to the company and introduce our second product into the US market and our first product into the Canadian market. And we want to do that with your funds in the next 6 months. And we propose to add value and triple the value of investment in the next 6 months. Are there any questions? Please contact us at such and such a number. That's the most simple and barest kind of information if you want to pass off here. It's a summary and it's a wrap up. But at the same time, you can use this slide as an opportunity carefully to add some of the following things. You could add past investments. You could say, we want to raise 1.2 million today from you to supplement the 500,000 that we've already arranged from a previous round of angel investment, and to supplement the $150,000 we put in as founders of the company, something like that. You could also show that you have achieved non-dilutive funding, that you've maximized all your other grants and credits and all the free money, the so-called free money that's out there. If you have maximized that, we want to see that, and we appreciate knowing that. And finally, you might want to show the valuation of your business. With this investment that you're going to make of $1.2 million, you will own 28% of our business. And with the growth pattern that we see and what you've seen in our previous forecast just a couple of minutes ago, we expect this company to grow to X millions in sales, which then leads to a valuation of X, which we believe then will triple your investment. So no hype, no exaggeration, but some kind of logic like that reinforces in the mind of the investor that you can take my money and you're going to triple the value in 3 years, and I'm going to be able to exit, which then brings me to the last point. Who will you exit to? If you have a planned exit that's kind of sensible, and that's not just a random, not everybody's going to sell to Google. Not everybody's going to sell to Apple. And so if you can show us that you have a potential exit in mind, that's the place to say it right now as well. If you can also show that similar deals to yours have exited in the past to a particular kind of company, like for certain dollar figures or certain multiples or certain acquisition kind of deal, certain types of deals where there's a certain kind of an acquisition of let's say a junior company that has a certain technology that then augments what a major player is doing in the global sphere, that's all valuable information to us. Don't overestimate the value of the business. Include sweat equity in your calculations, because even though you're not paying yourself, you still are worth that in the marketplace. And anybody who analyzing your financial statements is going to normalize that and put it back in anyway. If you do all of the above in this closing slide, you're going to have accomplished the sort of the wrap up and the conclusion that puts it all together for us. 12 slides, 10 minutes, you will have shown us all that we need to know to decide if we want to have the next meeting with you or not. So I'm going to summarize then what we've accomplished today and what your homework assignment is. So first of all, let's do the homework. The homework assignment is to produce your pitch deck. Produce draft number 1 of your pitch deck using this 12 key question format, following the notes as I have given them to you. I'm going to make available to KAST the speaking notes, the particular detailed notes that I used, and also a summary slide that shows you the 12 key questions in the same sequence. So I'm going to make that available to KAST. Secondly, your homework then is to produce this first draft and send it to me, h2@kutarnacapitalcorporation.com. If you send it to me in the next week or so, we're going to move ahead with future sessions in this webinar series. We're going to take your slide deck, we're going to screen share and show it to the audience of KAST participants here, and we're going to work our way through it, and I will provide some critique. I will also ask participants to add their critique either in the chat or in live format, and we're going to work with you to improve your slide deck. We'll do this several times until at the end of our 12 hours of process time, we're going to end up with the best quality slide deck for you that you can use to raise capital, to demonstrate product changes and modifications and improvements, and to show your potential supporters, whether they are advisors, your customers, your bank, and so on, your progress. The 12 key question slide deck, you'll recall, lays out the story in the right sequence of the way the mind of the investor works. It lays it out completely. It covers everything that you need to talk about. It does not give away proprietary information. It's simple. It uses graphics and visuals, and it uses very few words, and it's done in a very brief time period. It allows us then to decide whether we want to have the next meeting with you. And at that next meeting, we want to see your 150 slides. We want to see your full technology blow up, all that stuff. It's very important to us. You will have been honest and candid. You will have been simple, and you will have done your homework. We will see that you have calculated your markets, you have done some financial simulations, you know your technology, you know the problem that you're solving, you know what the customer wants, you've built a team. I'm not going to go over the 12 slides again, but you can see that you will have demonstrated to the investor that you have done all of this. And the most important feature that I would say is that this will demonstrate to the investor in a way that it's difficult to quantify. It'll be like a subjective analysis. We'll be watching you present. We'll be understanding what you're talking about. We'll see if you know what you're talking about. We'll see if you've done your homework, if you're making wild claims or you're making sound claims. We will see all that in your presentation, and you will either build confidence in us, asking for the next meeting, or you might not, and we might move on. Also, you might do a very high quality job. Most people do. These pitch decks can be very nicely done, very professionally presented. We may still not be interested, but that has nothing to do with the quality of your pitch. And so I want you to take heart and believe that a good quality pitch is a tool that you will use to get greater advantage and to raise capital and to do all those things that you want, but it's not a guarantee. It's never a guarantee that somebody who hears your excellent pitch will actually invest. But the point is, without an excellent pitch, you will certainly not get investment. With an excellent pitch, you will at least be able to reach out to the marketplace of investment. You will be able to put a credible story together. And using this format, it is credible because it's been a proven format. It's been used across Canada and increasingly in the US by people with some variations. People are always creative, and we're always developing new ways to present this information. But this basic 12 key question pitch deck delivered in about 10 minutes is the way to go. There's a new variant that's out there now, 6-minute presentations with 5 or 6 slides, even more short, even more curtailed, but for a different kind of purpose. Those are usually for short, sharp presentations at meetups and things like that. When you're actually in front of investors, the 10-minute, 12 key question pitch delivered while you're in the room, followed by Q&A. We haven't talked about that today, but we will next time. We will talk about how to handle the Q&A session, because sometimes your angel investor group or the people that you're in front of will take the time at the meeting with you present to ask you 10-15 minutes worth of Q&A. And once they do that, that's supplementary information that you need to be ready for as well. We'll speak about how you do that in our next session. Ultimately, you want to get the next meeting, and during that next meeting, it could be 1, 2, 3 hours, it could be multiple series of meetings. And so we want to, the basis for that will be a high quality pitch deck that you have developed using this format. So let's keep in touch. Send me your pitch deck as soon as possible so that I can spend the time to review it. We will then have a Zoom session with either everybody or one-on-one, and we will go through these. And then at the very end, my suggestion is that we would have everybody pitch to the group and practice in front of a group rather than just in front of an individual. It's more important that we do it that way. So give me a shout. My email address, h2@Kutarna Capital Corporation. It's Henry Kutarna. It's been really great to be with you today on this important topic of a really top quality pitch deck. And good luck in preparing them and presenting them to me. And we will talk very soon about your pitch deck. Thank you so much.